Welcome back to Investing Talk Podcast. This is your deep dive into the information that matters. Today, we're focused on Broadcom.
Yes, Broadcom, a major player.
And for this analysis, we've pulled together quite a stack of recent articles and reports. We're really digging into their financials, patents, market feeling, and, well, the general outlook.
Right, and we're drawing specifically from sources like Altindex, MarketBeat, the Futrim Group, and various financial analyses, all pretty current, seems like late May 2025 data.
Our goal here is really just to unpack what these different sources are telling us about Broadcom right now. We want to help you understand the key takeaways, the implications, based on what's actually in these reports.
Makes sense. Cut through the noise a bit.
Let's maybe set the scene first. The reports consistently paint Broadcom as, well, a heavyweight in tech. Semiconductors and infrastructure software, those are the big areas.
And what keeps popping up is this significant recent growth. Seems like it's really being driven by AI demand and also, of course, those big acquisitions they've made.
Okay, so let's get a glance at Broadcom based on these sources. They describe it as a global tech leader, right? With a pretty deep history going back to AT&T Bell Labs, apparently.
Yeah, that heritage is there. But it's also been shaped massively by acquisitions over the years. You know, names like LSI, Brocade, CA Technologies.
Symantec's Enterprise Security Unit, and the really big one everyone's talking about in these reports, VMware.
Absolutely. And those deals have just broadened their portfolio incredibly. We're talking complex chips, digital mixed signal CMOS, analog stuff used in everything from huge data centers and broadband.
So the smartphones in your pocket.
Exactly.
As we sifted through the reports, one specific division really jumped out. The Custom Compute ASIC group.
Ah, yes. That's where they're designing those specialized AI accelerator chips, tailor-made for the hyperscalers.
People like Google, Meta. And it's interesting, the sources also mentioned they're already developing custom chips for 4 more hyperscalers.
Which points to how central that strategy is. I mean, that segment, the custom compute ASIC part, generated $2.2 billion in revenue just in the first quarter of fiscal 25. That's significant.
That focus on custom AI chips for specific big customers seems absolutely key based on these analyses.
No doubt.
Speaking of Q1 fiscal 25, let's really get into the financial performance outlined in these sources. The numbers look pretty robust on the surface.
They do. The headline number for Q1 25 revenue is $14.916 billion. That's up 25% compared to the same quarter last year.
25%. Wow. And profitability.
Also looking strong in the reports. GAAP net income, the standard accounting figure, was $5.5 billion. Non-GAAP net income, which adjusts for certain items.
Like acquisition costs or stock comp.
Right. That came in even higher at $7.823 billion for the quarter.
Okay. And earnings per share.
The reports show GAAP diluted EPS at $1.14 and non-GAAP diluted EPS at $1.60 for Q1. One source did note it can be a bit tricky comparing the GAAP figures sequentially versus annually sometimes, but those net income numbers are quite clear.
Got it. And I saw adjusted EBITDA mentioned frequently. That's a key metric for them.
Very key. The analysis points to roughly $10 billion in Q1. That works out to about 68% of revenue. That's a very high margin.
Extremely high. What about looking forward? Any guidance mentioned?
Yes. For Q2 fiscal 25, the revenue guidance reported is approximately $14.9 billion. So similar to Q1, but still representing a 19% increase year over year from the prior Q2.
Still strong growth year on year. And cash flow. That's always crucial.
Very. The sources highlighted free cash flow for Q1 fiscal 26, that's the next fiscal year's Q1, based on their reporting cycle was around $6 billion, about 40% of revenue.
That's a lot of cash generation. Is that trend consistent?
Well, the data presented suggests a steady growth trend in free cash flow over the last 3 years. It seems directly linked to those expanding margins and, pulling cash out of the acquisitions as they integrate them.
And it's not just operating margins. Return on equity, ROE, was mentioned too. Historically high.
Over 30% historically. That metric, showing how well they use shareholder money to make profit, generally puts them ahead of most semiconductor peers, according to the analysis.
Although, I think one report noted NVIDIA might be an exception there, especially during these massive AI booms.
That's a fair point raised in the sources, yes. NVIDIA's recent performance has been somewhat unique.
Okay, what about the debt side? Especially after buying VMware.
Right. The debt-to-equity ratio is cited in the 0.8 to 0.9 range now.
So definitely higher because of financing that huge deal.
It is higher, but the analysis we looked at generally frames this level as manageable, mostly because Broadcom just generates so much cash. consistently.
Okay, so the financials seem like a clear strength according to these reports. Let's pivot a bit. How do the sources talk about Broadcom's innovation, its competitive edge, its place in the market? Patents came up.
They did. The analysis points to a substantial portfolio, estimated around 890 owned patents, often presented as, proof of their R&D focus.
But here's where one report added some interesting context. Well, 890 sounds big.
It's relative.
Exactly. That analysis compared it to peers. AMD with over 2,500, Intel with nearly 23,000, NVIDIA over 3,300, Texas Instruments over 8,500.
So when you look at it that way,
Well, that specific source calculated it put Broadcom in the third percentile for patent volume compared to those specific peers. The implication drawn was that, just based on patent count, it suggests maybe underperforming relative to those giants.
that's a really interesting nuance. A high number, but maybe not compared to the very biggest players in certain segments.
Right. So moving beyond just patent count to broader competitive advantage,
Yeah.
what did the sources highlight?
Several things. Their overall IP portfolio, brand strength and scale, especially boosted by VMware, and then cost leadership, driven by getting efficiencies from integrating all those acquisitions.
And that AI chip strategy we touched on earlier, that seems critical.
Absolutely. The focus on custom AI accelerators, or XPUs as they're often called, is presented as a really strong alternative to the general-purpose GPUs everyone knows.
And the numbers back that up, right? AI semiconductor revenues saw that huge 77% year-over-year jump in Q1 25.
Yes, and there's mention of specific tech, like their advanced 2-nanometer AI XPU using something called 3.5D packaging. Sounds very cutting edge.
This whole strategy of building custom silicon for specific massive clients. The analysis suggests it allows for optimization you just can't get otherwise.
Prioritizing cost, power savings, performance tuned exactly to their workloads. That seems to be the key differentiator highlighted.
And the potential scale here is just massive. Reports mention projections of AI data centers moving towards clusters with 1 million XPUs by 2027.
It's hard to even picture. And the market size for these XPUs and the related networking, just from their current big clients, is projected at $60 to $90 billion by fiscal 27.
And remember, they're adding 4 more new hyperscaler clients into that mix.
Wow. Beyond the chips themselves, the networking piece is also crucial in these reports. As these AI clusters get bigger, moving data around efficiently becomes paramount.
The Broadcom's work there is important.
Very. Reports mention doubling capacity on their Tomahawk 6 switch platform, completing the design for their next-gen 100 terabit switch.
And they're already looking beyond that. The roadmap aims for 3.2 terabit switching eventually, way past the current 1.6T focus.
It really underscores their strength in that fundamental networking infrastructure layer. That's a core advantage as these huge AI systems get built out.
Did the sources mention any recent product news?
Yes, actually. Around May 15th, 2025, they announced their third-gen co-packaged optics, or CPO, technology, aiming for up to 200 gigabits per second per lane.
CPO. That's about moving the optics closer to the silicon, right?
Yeah.
For speed and efficiency.
Exactly. It positions them well for future data centers and AI workloads where that integration is becoming really essential to handle the sheer volume of data.
Okay, let's talk VMware. The sources point to that integration as just a massive driver for their software business now.
Oh, absolutely. The numbers are stark. Infrastructure software revenues surged 47% year over year in Q1 fiscal 25. And that growth is largely attributed directly to VMware.
And a key detail seems to be their progress shifting VMware customers away from old perpetual licenses.
Right to subscriptions. The sources indicate that transition is now over 60% complete. That's quite fast.
And adoption of VMware Cloud Foundation, VCF, that seems strong too.
Very strong among their top enterprise clients. Report suggests 70% of Broadcom's top 10,000 customers are using VCF.
But what really stands out in the analysis is the impact on profitability and software.
Huge impact. The operating margin for infrastructure software jumped dramatically from 59% to 76% year over year.
76% margin. That's quite something.
According to the sources, it's a direct result of pulling in that VMware revenue and their really focused effort on integrating things and pushing VCF adoption.
The reports also mentioned a number, I think 39 enterprise customers already using the VMware Private AI Foundation platform.
Yes, that's the one developed with NVIDIA for running AI workloads on-premise within a company's own data center.
So the software side is also tying strongly into the whole AI narrative, leveraging partnerships there too.
Definitely converging.
Okay, so given all this operational strength in the financial numbers, what's the vibe from the market? What are analysts saying as of late May 2025, according to these sources?
Well, looking at the consensus from about 28 analysts covering the stock over the previous 12 months, the rating reported is a moderate buy.
Moderate buy. How does that break down?
It leans pretty positive. The reports show 25 analysts with buy ratings, one strong buy, and only two with hold ratings, so generally optimistic.
Oh, the price target.
The consensus 12-month target reported averages out to $229.48.
Okay, so comparing that to where the stock was trading around May 23rd, about $228.72. That average target didn't suggest a whole lot of upside at that specific moment, only about 0.33%.
True, the average target was very close to the price then, but it's worth noting the range of analyst targets mentioned is quite wide, from a low of $170 all the way up to $300. So quite a bit of disagreement there.
How does the consensus rating compare to, say, the broader tech sector or the market?
Relative to peers, Broadcom's score of 2.96 was reported as higher than the average for the computer and technology sector, which was 2.65, and also higher than the S&P 500 average of 2.54. So analysts seem relatively more positive on Broadcom than the market overall or tech peers, based on that metric.
And general news sentiment.
Also reported as positive, which kind of aligns with the strong results we've been discussing.
Were there many recent analyst actions noted? Like upgrades or downgrades?
The reports detailed actions over the past 90 days. It was a bit of a mix, an upgrade from Seaport Research Partners to strong buy, for instance, but also some firms lowering price targets slightly while keeping buy ratings, and others, like Morgan Stanley, boosting their targets. So ongoing adjustments.
It sounds like those strong Q1 results definitely help reinforce the positive view for many analysts.
Seem to. And the sources noted trading volume picked up after those announcements, as you'd expect.
Anything else signaling company confidence?
Well, there's the $10 billion share buyback program announced around April or May. That's usually seen as a sign management thinks the stock is maybe undervalued, or at least that they're confident in future cash flows and want to return value to shareholders.
Right. Okay, so let's try to synthesize this. Based on everything in these sources, what's the bull case and what's the bear case presented for Broadcom?
For the bull case, the points that stand out are the stock price itself, around $230 then, showing strong market interest. The huge market cap, about $1.08 trillion.
That massive $10 billion buyback program is a bull point, plus the consistent dividend, $2.36 annualized, giving a yield just over 1%.
And the stock has shown it can run, hitting that 52-week high of $251.88. Resilience there.
Okay, now for the bear case. What cautionary points are raised in the analysis?
A big one is the valuation. The trailing PE ratio was cited at a very high 188.04. That suggests the market has priced in enormous future growth. Some analyses might flag that as potential overvaluation risk.
188 PE is definitely up there. What else?
The dividend payout ratio was also flagged as high, at a 113.46%. Based on recent earnings, that implies they paid out more in dividends than they earned. Some might see that as potentially unsustainable long-term, without very strong earnings growth or dipping into cash.
That's interesting. Anything else on the bear side?
Notable insider selling was reported 720,576 shares recently sold by insiders. Now, that's not always a clear negative signal, could be for various reasons, but that kind of volume sometimes makes analysts pause.
And the stock's volatility itself.
Yes, the fact that it swung from that $251 high down to a $128 low within the past 52 weeks highlights the potential for significant price movement, which adds risk.
And finally, the debt.
That debt-to-equity ratio of 0.98. While the sources often called it manageable given the cash flow, it still represents significant debt financing. That inherently adds financial risk, especially if interest rates change or business slows unexpectedly.
So pulling these threads together, opportunities and risks, what are the big ones emphasized in these reports?
On the opportunity side, it's clearly the continued boom in AI data center spending worldwide. That's a massive tailwind for their custom chips and networking gear. Their push into advanced optics, like CPO, also seems like a good long-term play for high-speed infrastructure needs.
And the VMware integration continuing to drive software growth.
Exactly. That successful integration and monetization is a huge ongoing opportunity.
And risks.
A major one is just how dependent they are on the spending cycles of those few giant hyperscale customers. If those big companies tap the brakes on spending,
it hits Broadcom directly. Makes sense. Other risks.
Broader economic headwinds affecting semiconductor demand globally, that's always a risk for the industry. Potential regulatory scrutiny around big acquisitions is sometimes mentioned, though nothing specific or new seemed highlighted recently.
And maybe external factors.
Right, things like shifts in interest rates impacting valuations and spending, or trade tensions and tariffs messing with supply chains or demand. Those are always out there.
Okay, lastly, did the reports mention anything about social sentiment? What people are saying online?
Yeah, briefly. Noted investor enthusiasm on platforms like X, Reddit, stock forums, particularly focused on the product innovations like that CPO tech, and their key role in building out AI data centers.
So discussion seemed focused on the tech and market position.
Pretty much. The sources also mentioned some unverified rumors sometimes circulate online about potential future deals or partnerships, but they were careful to say, treat those purely as speculation unless confirmed.
Understood. Okay, well, that seems to cover the main points from this stack of sources on Broadcom as of late May 2025. Let's try to sum up the key takeaways.
Sounds good. We've seen a company firing on, well, most cylinders financially. Strong performance with growth really pushed by AI chip demand and that big VMware contribution on the software side.
Their strategy focusing on those custom chips and advanced networking for the hyperscalers really seems to be paying off, positioned as a key advantage in this AI era, according to the analyses.
And analyst sentiment, at least the consensus view back in May 25, reflected that confidence with that moderate buy rating. Although that average price target then suggested maybe the market had already priced in a lot of the good news, at least for the immediate term.
Right, and you absolutely have to balance that against the cautionary flags raised in the bear case. The high valuation metrics, that payout ratio, the insider selling note, stock volatility, and the debt level.
Crucial context.
And just to reiterate for everyone listening, this whole conversation has been based only on the source material we reviewed, current as of late May 2025. Things can change fast.
Absolutely. Which leaves us maybe with a final thought for you to chew on. Given Broadcom's growth, powered by AI and VMware, how does their specific strategy tailoring custom solutions for just a few giant hyperscalers position them long term? Especially compared to competitors making more generalized hardware. What happens if the hyperscalers' investment pace or priorities shift down the road?
That's a really interesting strategic question to consider as you continue your own research and thinking based on these insights. Thank you for joining us.
We really hope this breakdown of the reports has been useful for understanding Broadcom's situation.
If you found this valuable, please do subscribe, maybe give us a like, and leave a comment with your own thoughts. We appreciate the feedback. Until next time.